2, 1.
Welcome to Made for More Living.
One small step for man.
With Johnny Jennings.
Kick the tires and light the fires, Big Daddy.
The fastest and most exciting hour of news, events, and real estate in Northern California.
And this is a fact that was proved.
Powered by eXp Realty. Online at madeformoreliving.com.
Does everybody know what time it is?
Get ready. Here we go.
On today's show, we have a very special guest, and we are going to be playing Truth or Dare. Hello, Liz. How are you?
I'm good. How are you, Johnny?
Doing okay. No, we're not playing Truth or Dare. We're not doing that game, but we are going to be playing a little game of True or False, because you work for American Pacific Reverse Mortgage Group.
Correct.
And there's been a lot of changes in the last 30 years over what a reverse mortgage really is. Mm-hmm. So a lot of people hear reverse mortgage and they're like, that's a scam.
Yep.
I'm not touching it with a 10-foot pole.
Correct.
So let's just do some quick rapid fire questions here.
Sure.
So the bank owns a home in a reverse mortgage, true or false?
False.
False, okay.
False. So I got to tell you, I would say on a weekly basis when I speak to clients, that is the biggest myth and misconception. Although back in the day when reverse mortgages first came about, banks created their own program. So each bank would create their reverse mortgage as to how they wanted it to run. Mm-hmm. And in those times, yes, once the borrower used up all the equity in the home, and they were either forced to make payments and they couldn't, then the bank would take the home back.
Really?
So absolutely, that used to be so long ago where that was the case.
So what changed?
So FHA and HUD stepped in and started to oversee the reverse mortgage product. And with that came many changes. And a lot of those changes made it more consumer friendly. So the bank does not own the home. The borrower, whoever is on loan, is on title, and vice versa. Okay? So let's just say somebody enters into a reverse mortgage, and 5 years down the line, they say, you know what? We are out of here. We are tired of California, because that never happens.
Yeah, I never heard that before.
And so they say, you know what? We're moving to a different state. We want to sell the home. A lot of people think that they are stuck with a reverse mortgage once they have it in place. Untrue. So at that point in time, they sell the home. They list it with Johnny Jennings.
There you go. Love it.
And what happens at that point in time, whatever money they've used with the reverse mortgage, it's accrued interest and a little bit of mortgage insurance, whatever the balance is at the time, gets paid off through the sale, just like any other home.
Just like a regular loan.
Yeah. So what happens at that point in time is that no penalty, no harm, no foul. You just pay off that balance at the time, and you take that remaining equity to whatever state you want to move to.
Beautiful. Easy. So basically, if you have a reverse mortgage in place, you own the home. It's the same. A lot of the same rules apply as a traditional loan.
Correct.
Got it. So that's not scary.
No. It's in it, and it's, of course, for the right situation and the right person.
That's true. Well, how about this one? You can buy an investment or vacation home with proceeds from a reverse mortgage. True or false?
You sure can. True.
What?
Yes.
That's incredible.
Yeah. You can have two homes. You can have your California home, and you can have your, Tennessee home, right?
Right.
A lot of people go to Tennessee or Florida, somewhere by the beach.
Or Tahoe.
Oh, yeah. Yep,
Yeah.
for sure.
Get something in Truckee, maybe.
Absolutely.
There you go. All right, so you can buy an investment property with the proceeds.
You can.
How about this one? You get taxed on a reverse mortgage on the proceeds. Do you get taxed, true or false?
That is false.
Oh.
All reverse mortgage proceeds are tax-free because they're loan proceeds. They're not earned income. So you're not receiving a 1099 at the end of the year. You're just using the equity in your home to do what you wish with.
Which is basically what a lot of the more ultra wealthy types do. They take loans out on their existing assets. So that's their income, and they just pay it back.
Correct.
Got it.
So it's a really good use of those funds and not having to hit anything that doesn't require taxes.
I know.
Always a good thing.
Always want to avoid that, especially in California.
Oh, yeah.
So how about this one? You can buy anything you want with the proceeds from a reverse mortgage, included but not limited to a Louis Vuitton purse.
You were speaking my language.
Yeah.
You can use the reverse proceeds for whatever you wish. We don't question what you're going to use them for. Although the one thing that we steer away from is buying annuities within the transaction. So let's just say somebody wants to send some money over to a financial advisor to invest in annuities. That is a arm's length transaction. We can't do that. So whatever they choose to do after we close is up to them. But in the loan application, it does ask a couple of times if the proceeds are going to be used for that.
Got it.
So.
Okay, so but once it closes, the funds are yours to do with as you see fit.
Correct.
So you can go out, buy an investment property, buy a Louis Vuitton purse.
A mall.
Buy them all. buy whatever you want with it.
Correct.
Yeah. Awesome. Yeah. And then how about this one? You can rent out a home with a reverse mortgage. True or false?
So that might be a trick question, right? You can not rent out the home once you have a reverse mortgage in place. But let's say you have a single person in this current economy that we're in, and they're on a fixed income and they're struggling a little bit to get by. You can rent out a room.
Oh.
Yeah. So if they want to, have a roommate, collect some rent, alleviate some of that financial pressure.
Yeah.
Yes, you can rent out a room, but you cannot rent out the home. And I'll elaborate a little bit on that, because when you enter into a reverse mortgage, people will say, well, how are they going to know? Right? How are they going to know if I rent it out? Once a year, they do an occupancy check, right?
What does that mean?
So they want to make sure you're living in the home.
Yeah.
So I'm going to give you an example of a family member who did a reverse mortgage, and about the time that you did the loan, they sent out a letter, and it's usually a bright envelope, usually like pink or orange fluorescent, so you don't miss it.
Sure.
And so all it states is, your address, who was on the reverse mortgage, and then do you still occupy the residence at, right? Mm-hmm. You sign it, you date it, you send it back. That clears things up, right? You still live in the home. But if you don't respond to that, they send a second letter. Same thing, bright colored, all the things. You don't send that back. Whoever the borrower puts as their alternative contact on that loan application is going to receive a phone call, right? Mm-hmm. So that was me. I get the phone call. Does your so-and-so still reside at this property? They have a reverse mortgage with us, and we've sent out a couple of letters and have gotten no response. Okay, that was me to make the phone call. Hey, have you received these letters from the reverse mortgage company stating, that you still live in the home? Oh, yeah, I think I got them, but I tossed them. All right. So what happens next is that you have to provide the reverse mortgage servicer who is sending out the statements. You have to provide them with a letter saying that you still reside in the home, has to be notarized, as well as documents your driver's license with the property address, and a bill, like a utility bill that states their name and the property address. It has to be a recent bill. Okay. So you have to send all those documents in to prove that you still live in the home. But at some point in time, if the alternative contact doesn't reach out, then they'll check. They have ways of finding out. So
what happens if somebody's rented out the property, or I've even heard stories where the person has passed and they're still collecting checks for them to reverse mortgage, and they just haven't reported it? Like, what happens if any of those guidelines have been broken? Like, what's the next step for the bank or for the family?
So the bank could call that note due.
And is it due like immediately? Is it 90 days? Like, how does that work?
The servicing lender will send out a letter saying there has to be something done within 30 days.
30 days.
Yeah.
And if they don't, then it goes back to the bank?
So then they'll start the procedure of
a normal foreclosure?
Yes, correct.
So that's like that 30-day maybe be like the notice of default?
Correct, yeah.
Okay.
So it's a first notice,
okay.
And then they'll continue the process. And each servicing lender has their process of how to deal with that. But yeah, if they find out that somebody is not living in the home, that is part of the application process, is the 4 things that you have to keep in place is you must live in the home as a primary residence. You can have a second home and go back and forth. That's fine. Let the servicing lender know that you're going to be gone for a certain period of time if you're going to be gone a long time. You must pay your property taxes and homeowner's insurance on time. That is like a biggie, right?
Yeah.
And then any other property fees like HOAs or anything like that, make those payments. And then keep the home in good condition. Doesn't have to be Taj Mahal, but just make sure that you're taking care of that home. If things break, there's a hole in the roof, you got to fix that. Those are things that are safety and hazard issues to the borrower.
Yeah, and that makes sense too. Like, it's still your home. Treat it like it's your home.
Yes.
Yeah.
Because I think that's why people, and it still has kind of a stigma, is that, oh, well, people that have a reverse mortgage, don't take care of their home or they trash it because it's going to go back to the bank. Well, what if you want to sell that home and you want your highest dollar 5 years down the line?
Yeah.
Why would you do that?
Yeah. Yeah. You're just shooting yourself in the foot.
Yeah. Yes.
So that leads me to my last question is, you can't buy a home, or last statement, you can't buy a home with a reverse mortgage. True or false? You
can buy a home using a reverse mortgage. It's called a HECM for purchase.
A HECM for purchase.
Yeah. So HECM means home equity conversion mortgage. And they changed the name of a reverse mortgage to make it sound probably, better and kind of get rid of some of those myths. But it's the same thing. It's a reverse mortgage. It's just different terminology. And when I entered into this niche of the industry 15 years ago, it actually took an act of Congress to make the reverse mortgage a purchase tool.
Really?
Yes. So it's only been around for 15 years.
Wow.
And it's a really good use, especially knowing that people of the age demographic to qualify for a reverse mortgage are usually the ones that have the most equity to move from home to home. And we see a lot of downsizing. So people that have that big home, now they're empty nesters and they're like, you know what? We have a 2-story. This doesn't work for us anymore. We have a ton of dispensable space.
Yeah.
We don't want to deal with that anymore. Let's take our equity and move it into a smaller home and not have a principal and interest payment. That is always the goal with the reverse mortgage, is that you're not going to have a principal and interest payment moving forward.
That's so cool. So we've actually done a deal where somebody in, I can't remember the city. Man, this is where Valerie comes in handy. But I think it was Antelope. The person had bought a home in Antelope using a reverse mortgage, and they decided, hey, you know what? They're like the only person that's ever said this, right? They want to leave California. And so they decided, hey, we're going to sell, or she decided, I'm going to sell this home. I'm going to buy another home in, I think it was Utah, Park City, Utah. And she was so excited with what she was able to do because keep in mind, she had a reverse mortgage on this property already.
Yep.
She sold the home, took the proceeds from the sale, bought a home in Park City, Utah with another reverse mortgage.
Correct.
And she was so ecstatic.
Yep. It is a really good tool for relocating, for right sizing. And you'd be surprised at how many people not just, go into a smaller home, but we're talking right now about baby boomers. So, people that are older than baby boomers, they just want a roof over their head. Baby boomers don't want a roof over their head. They want the house, right? They want...
It's a lifestyle.
Yeah, it's a lifestyle. And so if they own a home outright, and they have no payment and they want to move in a bigger home, into a bigger home, but still have no payment, this is the perfect opportunity to do that with.
It's so incredible. Like so hopefully if you're listening to this, you're getting the idea that reverse mortgage, these are not your granddaddy's reverse mortgages. These are a whole new product. And actually when we come back, we're going to be talking about how having a reverse mortgage on a property is a lot like winning the lottery. Back after this.
Mike, do you think it's possible to have your cake and eat it too? According to my dad growing up, absolutely not.
Well, especially if it's German chocolate cake. Oh, my goodness. Well, it is actually possible, especially if you're selling your home and you're working with our good buddy, Johnny Jennings, and the Tom Daves real estate team. Listen to this. Margie and Ben, they wanted to sell their mother's home in Rancho Cordova, but here's the thing. They wanted to sell it as is with no repairs and for top dollar. So they wanted their cake and eat it too. But guess what happened? Johnny Jennings made it happen. The first weekend on the market, it brought them 8 offers, sold for almost $20,000 over list price.
That is what happens when you work with the professionals of Johnny Jennings and the Tom Daves real estate team. So if you want to get top dollar for your house, maybe you're curious what kind of offers you can get, or you just want a cash offer and you want to be done, call them today at 855-TOM-DAVES, or you can always go online to tomdaves.com. That's Tom, DAVES.com. License number 581837.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we're back with Liz Andersen from American Pacific Reverse Mortgage Group. And we are discussing the similarities actually between having a reverse mortgage, which is a good thing. This isn't your grandparents' reverse mortgage where the banks were actually taking advantage of people, but this is actually a savvy investor tool. It's something that helps people, right, who are on fixed incomes. Like there's a lot of great applications to reverse mortgages, and in fact, it's somewhat similar to winning the lottery in the sense that. So what's the lottery at right now, Liz? I think it's
like over $1 billion.
It's right around $1 billion, yeah. So man, I don't know what I would do if I won even a fraction of that. But with the lottery, you get the option of, hey, do I want the lump sum or do I want monthly installments? And so with a reverse mortgage, it's a very similar type of a situation, right?
Yeah, actually, it's actually, I would say, a little bit better.
Better than the lottery. There you go.
Because you don't have 2 options of how to take payment. You have 3 options.
And you don't have to pay taxes.
Yeah. Yep.
And
winner, chicken dinner.
There
right?
you go. Winner. So let's talk about some examples that you have and people that you've worked with. I think you mentioned your dad has a great story.
Yeah. Let's talk about that, because the other thing is people often think that reverse mortgages are a last resort loan, right? That only people that can't live off of their current income need a reverse mortgage. Yeah. And so a lot of people are embarrassed to say, I need a reverse mortgage, or, I don't want anybody to know, my family members. On the contrary, there's so many different diverse ways to use a reverse mortgage. And I'm going to start off with my dad's story, because it's actually, it's a little comical the way it ended up. When I first got into this industry, like I mentioned 15 years ago, it was in the downturn of the market, and I had gotten laid off of I was a title rep. Oh. So, and back then it was interesting. They had title reps that called on lenders, and then they had title reps that called on agents. Well, when the market crashed and there was no more refinances, guess who got laid off?
The lender.
Yeah, the lender. Reps. Yeah, lender title reps. And so I was one of those at the time. And I had worked for the company I work for now in a different capacity before going into title. So my old boss called me and he said, hey, I have an idea and a position for you. And we talked about it. And at that point in time, it wasn't even about, I didn't know anything about reverse mortgage. And it wasn't even about that. It was just, I needed a paycheck and I needed a job, and I really wanted to stay in this industry. And so I started from the ground up and started teaching people like you, realtors, how to use this program and how it would benefit their clients. When I called my parents and I told them that I had got a job, and they asked, well, what are you going to be doing? And I said, I'm going to be doing reverse mortgage. And they didn't know what that was. And so even me at the time, I was really unclear about how it all worked. And so I explained to them what it was, how a reverse mortgage worked. And my dad was like, what kind of shady company are you working for that doesn't make a payment on their home? Right?
Yeah.
And so I was like, Dad, it's legitimate. Trust me, I'm working for somebody that I respect and trust. And so I'm staying here. And so they were not for it. But anyways, here I am.
Was it Papa Mac? Who were you working for?
Actually, no, not Papa Mac. I was working for a loan officer under Papa Mac. Yeah.
Okay.
Yeah.
Okay.
Yeah.
Got it.
The Mac family for sure. So anyways, fast forward. my dad has always had investment properties, very savvy at, acquiring properties. And he was also a business owner. We grew up in Truckee, a small town. Yeah. And, but he did very well for himself. And at the downturn of the market, there was all these bank-owned homes on the market. I mean, there was so many back then. And he called me one day and he said, I'm going to go, quote, look at properties. And I said, Dad, you should probably, if you're going to put an offer in on a house, you should probably get pre-qualified by a traditional lender before you go look. Because his thing was, he would say he was going to just look and then he would come back, put a deposit on a house. And so
I do the same thing to Valerie. I'm just going to go look, and then I come back and I bought. Looking's buying.
Yeah. That's what I said. Okay, I know how this goes. So at the time, traditional guidelines for lending had tightened up so much that I just wish that he would have done that ahead of time. And he didn't. So my sister calls me a couple hours later and she's like, did Dad tell you he put a deposit down on a house? And I said, no, but I kind of figured that was going to happen. So he calls me. He sends me over all his paperwork, documents for a traditional loan officer to look at to make sure that he qualifies. And it took all of about 20 minutes. And they're like, your dad isn't going to be able to get a loan, traditional loan.
Oh, really?
And here's the reasons. He was business owner. He wrote off a lot. Times were tough at that time. He wasn't making a whole lot of money. And so when I called him back and I said, hey, you don't qualify. And he said, but I have great credit and I have 20% to put down. And I said, that doesn't work right now. Like right now, things are so tight. And I said, you're going to have a really hard time getting a loan if you even are able to get a loan. And so he said, I know the bank next door. That's where I bank. I live in a small town. They know me. I'll get a loan.
Okay.
He calls me 2 days later and he's like, I can't get a loan. And I said, kind of told you. So he's kind of racking his brain. And in my mind, I'm thinking reverse mortgage. He owns his home free and clear. But I wasn't going to be the one to bring that up again. So my sister calls me and she says, have you talked to Dad about doing a reverse mortgage? And I said, I don't want to be the one to bring it up again. So she says, let me see what I can do. So she calls him. He calls me back. Hey, let's have a family meeting. Bring up the paperwork for a reverse mortgage. Show me how it all works.
Okay.
So we get up there. We have a conversation. At that time, now the market was really low. Values were low. His primary residence was worth $675,000. Okay. And that was in the low peak of the market or low part of the market. And so I ran the numbers at the time with where the current rates were. And he was able to access $337,000 available in funds.
So 50% basically.
Yeah. Yeah. Back then it was 50%, different now, but yeah. And so the property that he had put a deposit down on, that was going for $180,000.
Wow.
Right? So
where was it? Was it in Truckee?
No, he actually purchased the property in Reno. They're about 35 minutes, 35 minutes. Yeah. So he went to Reno.
That house in Reno. Does he still have the house?
No.
Or does the family still have it?
Wait till you hear what happened.
Okay,
yeah.
okay.
This is a really awesome outcome. So he bought it for $180,000. So he pulled $180,000 in a lump sum. So that is one way you can receive proceeds, lump sum. So he pulled out $180,000
tax-free money
at closing. He purchased the house in Reno, right? And of course, you do the reverse mortgage on the home that is your primary residence.
Yep.
And you have no payment.
So not only does he not pay taxes on it, but he's not making a payment on it.
He's not required to make a payment.
Wow.
Okay. So he bought the Reno property cash, no payment. So the things that you're responsible for, of course, property taxes, homeowner insurance, and HOAs. Okay. Yeah. So he made that house in Reno a rental. Okay. So at that time, he rented it out for $2,000 a month.
Wow.
Okay. Fast forward, he kept that home until 5 years ago.
Okay.
He sold it for $430,000.
And he paid how much for it?
$180,000.
$180,000. Wow.
Okay. Here's the other thing. So he did that. And here's what is really unique is that his whole intent the entire time was to make a payment. He wanted to get a traditional loan, right? He could have made those payments.
Yeah.
Well, he says he could have, but then the market continued to tank. But he, when he could, made a payment on the reverse mortgage to keep that balance down, right? No penalty when you make a payment. You can pay it off at any point in time. You go to Thunder Valley, you hit the jackpot, pay off the reverse mortgage.
Win the lotto.
Yeah, win the lotto. But what ended up happening when he sold it in Reno, this is the best part of the story. He then did a 1031 exchange, and he bought a home around the corner from me where I live now.
Wow.
For $465,000. So he did take a little chunk of money out of his pocket bank account to make that happen. That is going to be their retirement home. Now, it's been a while, so now it's their second home. So they go up to Truckee 5 days a week. They come here on the weekends. We get to spend time with them. And at some point in time, they will be here full time.
Wow.
But he used that as a tool, to not only at the time that he needed to, get income in a down market. He owned a restaurant for 30 years. So at that point in time, when we were in a recession, it was just him and my mom working at the restaurant. He was running the bar and waiting tables. She was in the kitchen cooking and doing the dishes. And there was times when my mom would call me and say, we had one table at lunch. So not only did that reverse mortgage help them purchase that other home, but at times it also helped them keep their business afloat.
Wow.
So this is what I saw happening when COVID hit. When there was business owners that didn't know how they were going to keep their doors open, right?
Yeah.
It's like, what are we going to do? How are we going to keep things running? How are we going to pivot enough? And where are we going to get the funds? Because we're losing business at the beginning. And so I had a lot of business owners call me and say, I need to look into a reverse mortgage because this may be my saving grace for keeping my business afloat. And so if you think about all the things that you can do with it, this is my favorite because my dad ended up selling his business, paying off the reverse mortgage. He has that home in Truckee still. He paid it off.
Wow.
He has the one down here with us. That is owned free and clear. So the question is, should somebody that is wealthy, high net worth, do a reverse mortgage? People never think about that.
No, because you're right. There is that stigma. Mm-hmm. Yeah. So, and that's an incredible story. Thank you for sharing.
Yeah.
That's so
my
cool.
favorite. That's my
so
favorite.
cool that they're living next to you too.
Yeah. This is what was so funny because they came out here, they looked at homes, right? They had looked at all these homes, and then all of a sudden the realtor says, well, Liz, there's a house right around the corner from you. And I'm like, yeah, I see it. It had been on the market for a while. I go, yeah, I see it. It hasn't sold. I didn't think my parents were going to like that house, right? And so my dad's like, let's go look at it. Well, we go look at it, and we went in through the gate of the backyard because my dad's like a huge backyard person, right? And we go back there, and the backyard was huge. And my dad didn't even walk into the house because we'd seen all the other houses in the backyards weren't as big. And he goes, this is it. And my mom goes, we haven't even looked at the inside of the house. He's like, I don't care. So it turned out that, it was perfect because when they're here at some point, we want to be involved with when they get older, their care. We want to be close to them. So it just turned out, it wasn't until they got into contract and my mom called me like 2 weeks in and she's like, we didn't even ask you. Are you okay with us going to be living that close to you?
Too late now.
Yeah, no. And for us, it was the best case scenario. When they're here, how better does it get than to be around the corner?
Brings up a good point because there's a lot of people who are moving either out of state, right, for tax benefits,
correct,
cost of living. But then there's a lot of people too that are moving because they want to be closer to family. Yes. And so what you just outlined is an exact way where somebody You can go, hey, I want to have the monthly mortgage.
Correct.
Here's a way where you can move closer to family
Yes.
and not have a monthly payment. So if you're in that age bracket, if you know somebody that's considering that, what's the best way for them to reach out to you, Liz?
The best way to reach out to me is you can reach out to me either via phone or email. So my cell number is 916-223-8869, or you can reach out to me at liz.andersen. Andersen is spelled ANDERSEN at A as in Apple, P as in Paul, mortgage.com.
Or reach out to me and I'll be happy to connect you. All right, we'll be back right after this.
Okay, Matt, I know that you and your wife are pretty handy around the house. If something breaks, you can rewire something or fix it.
We watch a lot of YouTube videos.
Yes. But for me, like, I have a brother who's a contractor and I rely on him to do everything. I've tried to replace electrical outlets and I get shocked and it doesn't go well. But this is the thing. If you are maybe trying to sell your home and there's some things that need to be fixed before it goes on the market and you don't know what to do, good news, you can take advantage of Johnny Jennings and the Tom Daves real estate team's Fix Before You List program. That's what Jerry did. His Elk Grove home needed a little bit of work before it went on the market. But once that was all done, it went on the market. And the first weekend, it was sold to some Bay Area buyers. And that's what happens when you work with Johnny Jennings.
Yeah, so if you're curious how much you would get for your home, no matter what kind of condition it's in, go to tomdaves.com, type in your address, and bam, right away you find out what kind of offers you would get on your home, the low and high end. And how about this? An all cash offer from Johnny Jennings, no matter what kind of repairs your home needs. The website again is tomdaves.com, or you can call up Johnny Jennings at 855-TOM-DAVES. License number 581837.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So I'm here talking with my good friend Liz Andersen with American Pacific Reverse Mortgage Group. And Liz, I was going through my bag. I have this little, briefcase that I take to work every day. And I pulled this little guy out. And I was like, well, how'd that get in there? So if you're listening on the radio and you can't see what I'm holding up, it's a little action figure from, what was it called? Captain Planet. From the show from the early 90s. Wow. It was a cartoon thing. So I grew up without TV. And so that's not true. I grew up with television, but my parents required us to read for 45 minutes. In order to watch 15 minutes of television.
Smart.
And so we get little tickets.
Yeah.
And you can only watch so much television if you're having to read an hour and a half to watch one show,
Wow.
So, but one of the shows that we were allowed to watch was Captain Planet. And so it's just been fun as we've have our, Jack a little over 2, and now Ben was recently born.
That's awesome.
So anyways, Jack's putting this, putting LeVar Burton. So actually the character I'm holding up is Kwame. We're going deep on Captain Planet right now. Kwame is actually voiced by LeVar Burton. And LeVar Burton, he did like Reading Rainbow. He did Geordi on Star Trek. And he's from Sacramento.
Wow, I didn't know that.
Yeah. So
that's pretty cool.
He was born overseas, but then his family moved here when he was about 2. And then they moved back. So he considers Sacramento to be his hometown.
You know your history on that guy.
Yeah. Well, I'm a Star Trek nerd. So
how is he doing with the baby at
Jack?
Home? Yeah, how's Jack doing with that?
He good. I mean,
you say that with a little hesitation.
Well, it's just so I'm the oldest, and Valerie's the oldest, and so we, have the younger siblings, and so I'm way our birth order was really quick with my brother and sister. So it was me, and then 16 months later, my mom gave birth to twins. Oh, wow. So really close together. People thought we were triplets. And so I obviously don't remember any of that, but I can see, so I'm just trying to envision what I would have been like at his age.
Oh yeah.
And just process. And you can just see hey, mom's more busy with Ben. He was the only grandkid.
Yeah. Oh.
Right. And so now he's not the only one anymore. Yeah. And so anyways, but he's doing good. He's getting to the point where he's held Ben a couple of times, and he's really nice to Ben. And every time before I leave the house in the morning, I go, "Hey Jack, you're gonna take care of Mama, right?" And he's like, "Yeah. You're gonna be nice to baby Ben?" Yeah. Okay. And so it's always taking care of Mama and baby Ben. So
I love it.
But yeah, so he's doing good. But back to the subject matter at hand.
Keep chat.
With reverse mortgages, what I'm seeing more people use them for, honestly, is rather than staying put in an existing home, they're using it to relocate and get closer to family, or relocate to maybe somewhere in a more cost-effective place to live rather than where we're at.
Yeah.
Can you speak to a little bit about that? And also, what are are there guidelines? Like, how does that work?
Yeah. So I can start off. I do have a relocation story. And you're right. Like, people are moving closer to family, moving closer to medical facilities, right? Some people like up in the mountains are like,
Truckee.
yeah, 100%. Although Truckee has a really good medical facility. But there are people that are just away from hospitals, away from care, away from family. And as you get older, you just want to be closer to family and those things. So I do have, I had a client, it was during COVID, that reached out and as we were coming back from COVID, and said, this has really taught me a lesson. Like, I have been alone, locked up by myself, without any of my family.
Yeah.
And what we realized at that point in time is there's a lot of people that are alone at that age, and we all need connection. And I think it was a big eye opener for some people. So I had a client reach out to me at that time and said, you know what? I know I want to be closer to family. So she was looking out. Her family was in Florida. So, of course, Florida is a place where a lot of reverse mortgage clients go to retire.
Sure.
Yeah. So the senior population is large there. They listed their home here at $544. Okay. So after sale, after we paid off whatever they owed and commissions and all of that, their net proceeds were approximately $382,000. Okay. And we know that in Florida at that time, possibly still now, you can purchase a home for $300,000, which is where her price point was. So she went out to Florida. At that time, the way that we calculate a reverse mortgage loan amount is we take the age of the youngest borrower, the current interest rate, and the value of the home. That gives us a loan amount available to the borrower. So the loan amount at the time to the borrower was $112,000.
Okay.
Her down payment was the remaining amount of that $300,000, which is $188,000.
Wow.
She still had funds left over of $194,000 after she purchased the Florida home.
And no payment.
No payment besides property taxes and homeowners insurance.
Wow.
So that is the power of the purchase, of the reverse for purchase, is that you can, most of the time, and it just depends on what area of the country you're going to relocate to, that you can make that purchase and then possibly still have funds left over to add to a retirement portfolio, to have as an emergency fund. It's really important that we look at cost of living these days.
Yeah.
I mean, we talk about fast food workers making $20 an hour now, right? How is that going to affect our pocketbook?
Correct.
So everything is going up. And I continue to tell my husband, you really think things are going to come down? I mean, look at the history of real estate. My dad purchased his first property, 1974, again in Truckee. He purchased it for $32,000. He sold it last year for over $1 million.
Wow.
So what do you think? You think that things are, unless we have a worldly event that, who knows in this day and age, but I just think that we'll continue to see things rise. Absolutely.
And I mean, you told the story about Truckee. I'm working with a lady in Folsom. She bought the home brand new. She's got a lot of miles on the odometer, but she bought the home brand new in 1960 for, I think it was $10,000. Wow. And it's worth, almost $6 now, almost $600. So, it's just, and she was so pissed at her husband. She's like, why are we overpaying for this house? Right. And so it's like, okay, if you hang in there long enough, it's going to be worth something.
Yeah.
There's stories about people buying houses in Natomas for $90,000 and they're like, oh, you're way overpaid. And now they're worth way more than 90.
Yeah.
And so I'm so excited to go in. Like, I had honestly forgotten about the purchase side of a reverse mortgage and the fact that a payment was not due on that, because there are so many people that are wanting to relocate to be closer to family, like grandbabies, right?
Oh yeah, that brings people closer to.
It's like it's its own type of gravity. It's a force of nature.
Yes.
Grandchildren, and so, but they're wanting to be closer to family, but they can't afford, or they don't want to deal with that monthly payment.
Correct.
And a reverse mortgage is a great way out of that. So, aside from,
we want to talk about a little bit about guides and
qualifications. So aside, there's some age limits and some other stuff. Correct.
Correct. Yeah. So I won't dive too deep into that, but I'll just kind of give you a little bit about, if you wanted to get more information in regards to qualification. So when I first started, the age to qualify for a reverse mortgage was 62. And that is for the traditional FHA reverse mortgage, which is the one that is predominantly used in our industry.
Okay.
And it's called the HECM. That age qualification is 62 years old. So at least one person that's going to be living in the home has to be 62 years old.
Wait, what about this? What if somebody's 62, somebody's under the age limit, the older person passes, the younger person doesn't qualify? What happens there?
Well, actually, there's something called a non-borrowing spouse. Okay. So that rules came into play a few years ago, because before, if somebody was under the age to qualify for a reverse mortgage, they would have to sell the home or get a loan and stay in the home, right?
Refinance,
Yeah. And so what happened is that lawsuits came into play. And so they made rules that somebody that was under the age of 62 could live in the home. The one thing, and so they will be able to stay in the home if, let's just say, the person that was 62 years and older, the borrower passes. The only exclusion to that is, let's say that a borrower was receiving monthly income or had a line of credit established with the reverse mortgage from some of the loan proceeds. At the time that that older person passes, then the spouse would not receive those benefits of a monthly payment or the line of access to the line of credit. But they can still remain in the home, living in the home, as long as they pay their property taxes, homeowners insurance, live in the home as their primary residence, and maintain the home. So they made rules so that the person that was younger wouldn't be forced to sell the home or have to get a traditional loan to keep it.
Got it.
So some things came into play. Yeah.
Good.
Yeah.
So basically you're not out of luck if
correct. Yeah.
There's options.
And I always tell people, just make sure, if the older person's like, let's just say 65, and the younger person is, let's say they're 60 or 61, and they could hold off to do the reverse mortgage when they're both of age. I just think it's better for everyone, because then they receive the benefit of getting the continued monthly income. Because if both of you are on Social Security and one passes, you lose an income.
Yeah.
So that's another reason to do a reverse mortgage is, when somebody passes and you lose an income, where are you going to replace that income from? Right.
Yeah.
So a reverse mortgage is a great option. I do have a success story on that. We'll talk about it a little bit later, but let's talk about guides and a little bit that you need to know. So 62 years old for the HECM. There are other programs now in the market that are 55 years and older.
Wow.
So
is there any detriment to starting it sooner rather than later? Like interest rates higher, loan ratios lower?
So yes, there's a couple of things. So yes, the younger you are, the less loan proceeds you receive.
Okay.
The older you are, the more loan proceeds you receive, because it's based off of life expectancy, right? So the older you are, the less you're going to time you're going to have the loan. So the more they're
you got less sand in the hourglass.
Yes, for sure. So, and then in regards to rates, so let's talk about, I can't get into rates in detail, but people will always say, well, should I wait for rates to come down? Well, first of all, we're not predictors. No. I have been telling people that all year long is I don't care what people say in our industry. We don't know what's going to happen. There's so many worldly events that affect our industry that I just say, is it the right time for you?
Correct.
Right?
Yeah. If you didn't see a global pandemic happening, if you didn't call that, then don't try to guess what's going to happen in interest rates.
Yeah. So we talked about age, 62 or 55. And often people think that they wouldn't qualify for a reverse mortgage because they're on limited income or off fixed income. And so it is a little bit easier to qualify for a reverse mortgage rather than a traditional loan because we are not debt to income ratio based, right? So we don't look at the income part like traditional lenders do. We take a look at what residual income is left over after you pay off all your monthly expenses. So I'll give you a quick rundown. We take all of your monthly income, whether it's one or two people living in the home, and then we run a credit report. Now, we are not FICO driven, so we don't look at the credit score, but we do look at the last 24 months of payment history on a credit report. And if that looks good, you've made payments on time for the last 2 years, as well as property taxes on time, we check that, and we look also at homeowners insurance being paid on time. So we look at all those things being paid on time. If they have paid everything on time for the last 2 years, then they credit qualify. Okay. So, and even if they have a few dings on their credit report, we can still do the reverse mortgage. It just entails a little bit more. So the other thing is, so that is credit. Now, income, we take their income, we deduct all of their minimum payments from their credit report. We deduct property taxes, homeowners insurance, and 14 cents per square foot in the home for utilities.
Okay.
If there's one person living in the home out here in the West, they have to have $589 left over and they income qualify.
Okay.
If it's two people out here living in the home, it's, I believe, $998, so $1,000 left over to live off of. So if you meet those two requirements in credit and income, you qualify.
So basically, there's the age requirements, and then essentially it's the home, right? They're saying, do you have enough equity in the home?
Yes.
And then they're gonna build out a package based off the equity in the home.
Correct.
Awesome. Thank you so much, Liz. And if you want to get a hold of Liz, just reach out to me. You can go to madeformoreliving.com. Give me a call. She is our preferred reverse lender, our favorite reverse lender out there. And what's your direct phone number as well?
916-223-8869.
Thank you.
If you're struggling financially right now, you are not alone. Times are tough for a lot of people. Like Steve in Roseville, he needed some extra money fast. So he decided to sell his property and gave our friend Johnny Jennings a call with the Tom Daves real estate team. Johnny guarantees that he can sell any home. So Steve knew he'd be able to get the money he needed, and that's exactly what happened. Johnny Jennings and his team was able to get Steve multiple offers and even sold the home on the timeline that Steve wanted.
So if you've been wondering what kind of offers you can get on your home, now you can find out. Or even get a cash offer when you talk to Johnny Jennings and the Tom Daves real estate team. You can reach out at 855-TOM-DAVES, or you can go online to tomdaves.com. That's Tom, DAVES.com. You are not going to regret working with the professionals, Johnny Jennings and the Tom Daves real estate team. So give them a call today. License number 581-837.
This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
We've had a fantastic show so far, and we're not done yet. So far, we have covered reverse mortgages, the history of them, how they used to be more of a predatory type of a situation to where now they are actually an excellent choice for many reasons. One of them being if you're relocating and you don't want to, if you want to buy a new home in a new location, maybe out of state or stay local, but you don't want a mortgage payment, it's a relocation option. If you want to supplement your monthly income, it's an option. If you want to buy an investment property, it's an option. There's just so many different great ways that reverse mortgages can be used. And at the end of the day, it's your house. It's just consider it like more of a traditional loan. So with us today is Liz Andersen. Liz, you said you had another great story for us, something about 2 for 1.
Yeah, I'll try to make this one quick. And it actually turned out to be amazing. These buyers were savvy and they relocated from San Diego. wanted to be closer to their two daughters in El Dorado Hills. And so they sold their home in San Diego. They netted $950,000. They found the home in El Dorado Hills that they wanted to move into. At the time, it was listed at $800,000. So their loan amount for them, plug in their age, value of the home, interest rate, loan amount available to them on the reverse mortgage was about $308,500.
Okay.
Their down payment came from their net proceeds from that $950 was $491,500. So if you add those two together, you come up with $800. Again, zero principal and interest payments. They had $458,000 left over because they did the reverse purchase instead of buying all cash.
Yeah.
They waited a little bit and they found the perfect investment property. They purchased it for $450,000 from the net proceeds that were remaining, the $458,000.
Yeah.
They had $8,000 left over, a little bit left over for a little housewarming party.
There you go.
They rented it out for $2,500. And this was the thing. They wanted to leave something for their daughters because they knew that living in the reverse mortgage property, they may run out of equity at some point in time, but they wanted to leave an inheritance. Mm-hmm. That second home is the daughter's inheritance.
Wow. And it's owned free and clear, and it's cash flowing like a big dog.
100%. And values go up, right? So what will happen to that home when it's theirs?
Wow.
Yeah.
That's so cool. So they got to the recap. They sold their home in San Diego. They moved closer to family. They bought a home in El Dorado Hills that they don't have to make a mortgage payment on. And they also bought an investment property that's now spitting off at the time $2,500. $2,500 a month.
Yeah.
Wow.
And the realtor was really happy to be able to help him with those transactions.
Well, absolutely. You got two transactions, and you met some great people. So, well, hey, Liz, thank you so much for being on the show today. Is there any last nuggets, anything that you want to share with anybody, with the listeners?
I would suggest or just advise, I will always repeat this, not for everybody, but definitely take a look at it for wealth building. Take a look at it for a few things that you had mentioned, for income, for investing. There's so many different diverse ways that you can use a reverse mortgage. And we didn't get to talk about of all the other programs that are available. So reach out to me if you have any questions. I know we're at the end of our time, but yes, I can be reached again, 916-223-8869. And thank you for having me so much. I appreciate it.
Thanks for being on, Liz.
Guys, there's a reason why they are number one in all of Sacramento. We're talking about Johnny Jennings and the Tom Daves real estate team, made for more living, powered by eXp Realty. If you're curious what your home would sell for, go to TomDaves.com, type in your address, bam, right away you find out what kind of offers you would get. And listen to this, how much you would get if you wanted a cash offer today from Johnny Jennings, no matter what kind of condition your home is in. Again, it's TomDaves.com.